Hi everyone, Michael McVitie here. Welcome to 2025. Happy New Year. Want to do the newest blog on basically rental predictions for 2025, the State of the Union, if you like, for rentals in Southwest Florida. Again, I'm Michael McVitie, and I hope you've had a great start to the new year. And without further ado, let me just show you the screens. All right. So first of all, very often people ask me, Michael, how do you put these slides together? How do you get all this information? A lot of subscriptions, blogs, a lot of feedback that I'm getting from different sources, in addition to what we actually do in our company here. We have 440 properties managed, a lot of them different classes, A class, which is higher end, B and C, which is more the lower end class. So we have a really good cross section of rentals. Okay, so when we're talking about all this research, I'm going to give it to you. I'm going to try and do it very, very quickly. So we're going to start with a national multifamily trends. We're going to get to national single-family home trends, and then we're going to bring it all home back to our local level, which is, of course, the most important for our clients and you guys watching this here. So again, Michael McVitie, president of Red Fortress Property Management. So let's talk a bit about what's being said out there. So you read things like from Yahoo, for instance, they're saying who wants to be a home opener? Almost no one apparently, because what they're saying is nobody can basically afford home ownership versus renting. It's at least 35% more expensive to own a home and say rent it out versus renting. So it's at a near historical high and it's likely persist, right? So what does that mean? You're probably thinking, geez, everybody is going to be a renter. And what that means is that the rental rates are going to come crashing up really high. And in actuality, that's not the case whatsoever. So what happens is, again, a couple of months ago, 3 months ago, actually, I did a rental analysis and we talked about two things that are important. One is the unemployment rate, like whether do people have jobs, and then two, what about their disposable income or their discretionary income? How much money do they have to spend towards rent? Those are really the key. So really this article doesn't, I understand it might be more expensive with insurance to own a home, but when it comes to renters, they can only pay out what they actually have. And obviously we've been having some issues with inflation. The inflation has slowed, which is great to hear, but the actual cost of goods is still high. So the gas prices, for instance, the food, it hasn't gone down. So people still don't have any more money than they did a year ago or 2 years ago. Okay. Another headline from the Telegraph, from the United States Telegraph, not the British Telegraph. It says why 2025 will be the worst year yet for landlords and renters. So, how is it about that for an end of the world headline? But in actuality, I'm here to say with you that I don't predict that at all. Sort of something cataclysmic happening, like a meteor hitting us or something, we're going to be fine. The worst time in for landlords was back in 2006, 7, 8, and 9 when we had the local depression here, real estate wise. That was the worst, and I don't think that 2025 is going to come anywhere close to it. Let's hope not. Okay. So let's take a look right now at how the multifamily is doing in terms of occupancy. So we're looking at this, and let me just point out a couple of things here off to the side here. So when we're looking at the occupancy for multifamily, you can see that right now we're sitting about here, which is really kind of low compared to, this dates back to 2020, second quarter, basically when the pandemic hit. Okay. So what we're looking at is that we're still very, very low when it comes to occupancy in the multifamily industry. And a lot of people talk to me and say, Michael, there's a lot of building going on in Southwest Florida. I know that expensive apartment communities, expensive homes because land is so, obviously high and expensive. So it's probably not going to affect, say my 2-1 duplex or something like that at all. In actuality, it does. And let me show you an interesting study that was done. So for those of you that love math, you're going to get excited with this. For those that don't, let me explain it to you. What they were talking about up here is Class C, which is a lower end rental for apartment communities. And what they were talking about is, hey, as we start to build inventory in the multifamily industry, how does that affect lower end rentals in the apartment industry? Okay. And what they were basically saying is when you look at it here, as you started to build up supply 2, 4, 6, 8, 10%, you can notice that this is where the rents were. Everything starts to slide. So after you build a little bit, you can start to see where the rents start to go down, even for lower end rentals, despite the fact that they're building up very expensive, say high-end multifamily. So again, the laws of supply and demand still work, even if you're building $500,000 homes. That's still going to have an effect on the lower end properties, believe it or not. So let's talk a bit about the multifamily supply in the Fort Myers area. All right, so here are some numbers. Fort Myers had about 2,200 units come online in 2024. Right now, we have 6,700 units under construction. That's triple for those that are following along, and it's going to increase our inventory by 28%. According to CoStar, that's one like kind of agency. Lee County dropped the most in the nation by 5.5% in the multifamily rents. Collier was at 4.5% decrease in 2024. Okay, so they're predicting that vacancies are going to double, going from around 8% to 17%. Remember, a vacancies can also be when you're actually fixing up units too, right? Okay, so it's going to go from 8 to 17% just to make sure that it wasn't just a one-off. Harvard study talked about how Lee County is going to be the first in the nation with a 9.5% drop in rents. Collier is going to be third at 6.5%. That's Collier County. Austin, Texas is going to come in second in the nation for 6.7% drop. So this is multifamily. It does affect, obviously, single family homes. That's what we do. We're seeing a lot of competition. We're seeing, for instance, rents being offered for free, like 2 months free, 3 months free rent if you sign like a 14-month lease, that sort of stuff. So again, we're starting to enter into what our area often experiences because of the rental housing industry and the construction and how we're very heavily dependent on real estate. But we're starting to get into a little bit of a boom bust situation where things are going great, and now the market is starting to adjust in our area. So a lot of people love Zillow. I get it. Zillow's numbers are often very off for us when it comes to rentals, but I just want to show for those Zillow fanatics out there, here's something that they showed, and you can see right over here. This is the Cape Coral, Fort Myers area, Southwest Florida, and you can see we're one of the smaller year-over-year rent growth declines, just like some places in Texas. You can see for the most part, the nation, like things have kind of gone up higher, but I just wanted to point that out to you for those people that just love Zillow. There you go. They're even saying that we're going down in rental amounts and asking prices. Now, here's another perspective, which I really did enjoy from Fast Company. Here it is. It says builders are a bit desperate to move Florida inventory. Again, they're talking about real estate in general here. And this is a national company. This is going to be important in a second here. So it says here the Florida's housing market was among the hottest in the nation before the pandemic. However, the market has since cooled. The active inventory is now back above pre-pandemic levels, and falling home prices in areas like Southwest Florida's Punta Gorda and Cape Coral. So congratulations, we're on the map again nationally, not necessarily for the right reasons. And they also say, additionally, condo prices are down year over year in nearly every Florida market. Okay, so let's take a look a little bit more in the Southwest Florida, showing some sales prices and so forth like that. So you can see here, they're talking about November to November, so year over year. So this way you're not getting like, compared to the previous month where different things can happen. They're talking November of 2023 to November 2024. You're seeing that they have a change here in price. Punta Gorda area, Charlotte County, about 8%. Cape Coral, Fort Myers area, about 6%. So that is the home price is lowering by 6%. For those that are curious, Naples down almost 4% as well. Okay. Now, also, what has this done? The housing sales inventory has also increased. Now, this one here, I don't really like these numbers. It's 2019 versus 2024. I don't really like that because it's a 5-year shift. So instead, what I want to do is focus basically on 2 years, not 5 years, because a lot can happen in 5 years. We've had hurricanes after hurricanes and that sort of stuff. But let's focus on 2 years. So Charlotte County, 2 years ago, they had about 1,100 properties on the market. Now it's up to 3,600, so it's more than tripled. Okay, Fort Myers, Cape Coral area had almost 4,000 listings 2 years ago. Now it's almost up to 11,000. So once again, the number of homes available to be bought has almost tripled. And in Naples, it's gone from $2,650 all the way, 2,650 properties over 5,600. That has doubled, almost tripled as well. Okay, so that's what's happening. So a lot of properties available on the market to be purchased. The sales prices are starting to slide. That's happening all over in Southwest Florida to some degree. So let's talk a bit about the single-family home days on the market nationally. So here is so a little bit of good news. So they were saying like up till a couple of months ago, the average day on the market price, or I should say the average days on the market was 36 days. Okay. And it's gone down by 1 day to 35. So that is actually a little bit good. You can see how things were kind of trending upward, sadly, where properties were not renting as fast. Now it's kind of hovered a little bit, starting to go a little bit down. So that is nationally, that is a good positive trend, honestly, for the days on the market nationally. Now, here's a little bit of bad news. When we're looking at, again, from Zelman and Associates, national single-family home occupancy, you're going to notice that they're talking about we're among the decade low occupancy. So we're less than 92%. We're at about 91.5%. These are all of November's over the last 10 years. So you can see we are basically a decade low occupancy. Okay, so that's not great. We'd like to see, obviously, that number come up. And that's why you're going to see nationally as well this year a lot of rental prices dropping. When we look at the rent growth, so a lot of people say, hey, properties coming up for lease renewal, what's happening nationally, and then we'll get to local. You can see all the way down here, well, actually, you might not even be able to see it, but right down here, November of 2024, it's nothing, it's zero. So what they mean by that is that when somebody moves out, they're not increasing the rental rates on average nationally. So you can see it's very, very small. This dates back all the way to 2012. So we've had the lowest increase in rent growth, nationally speaking, for single family home in 13 years. Okay, so let that sink in for a little bit. So low occupancy for us as well, and obviously the rental rates are not moving up. Now, here's something that's a little bit interesting. They're talking about how how many applications are we getting for each unoccupied or vacant property? But here's a good thing to take from this. Like I titled it, How National Data Can Be Different from Ours Here Locally. So you'll notice that over here, you have like December and November are kind of quiet times nationally, but you can see in the springtime that there was, 3 applications for every, kind of vacancy, that sort of thing. And then all of a sudden it slides down to below 2 to almost half, okay, in December. Well, that's not what happened with us. You'll see here in the next slide, you'll see here that actually in December for us in 2024 actually increased, way increased, like 4 times as many applications coming in now than August, which we certainly appreciate. But you can see just in a bigger picture, locally, it does mean a lot. Obviously, the factors locally affect things far greater than just nationally. And I just wanted to point that out to you. But one of the interesting things when you're looking at this is 30% drop in applications year over year. Okay, so that's with Red Fortress. That's a local, that's our numbers. It's not from anybody else. I wanted to share it with you. So basically, what does that mean, or what can affect those types of numbers? Very simple. So first of all, something that can affect those numbers are how many vacant units you have. So you can have, say, 1 month 50, and then the next month 40, or year to year you can have different numbers. So that can obviously have an effect. But we've been pretty kind of steady with the number of vacant properties we've had from 2023 to 2024. So what this trend is also showing is, and I feel, is that a lot of people are staying put instead of moving out of their home. They're staying put. And they're just waiting for some of the confusion. We had election year. We had 2 hurricanes that kind of came close to our region and that sort of thing. So a lot of people are just staying put for the most part. I mean, people will still move, but overall, people are just saying, "Hey, I'm going to kind of wait this out and see how things are going." Some rental prices are dropping. Maybe it's not yet time for me to move and make the change. Maybe in the next 6 months, I will. Okay. One of the really, really interesting things that I had a chance to talk to my staff about is that I asked them, I said, well, what's one trend that you saw in 2024 that maybe you didn't see in 2023 with regards to these applications? Stunning. They were saying that in 2024, applicants were asking them to drop the income requirement for our rental properties. What they were saying basically is, hey, I want to rent your property, but I don't make enough money in terms of what your rental price is and what the gross is. I want you to lower the standard down so that I can qualify to rent your properties. So once again, that's a accurate proof here locally in Southwest Florida, where we have again properties in Fort Myers and Cape Coral and Port Charlotte and Naples and that sort of areas. Again, not a lot of people have discretionary income, and they're saying, "Hey, listen, we want to rent a property, but we really don't meet your qualification." By the way, this qualification we've had for over 30 years. Okay, so just keep that in mind. So what are we seeing in terms of occupancy and vacancies in our marketplace? Let me go through this real quickly. We have three kind of rows, if you'd like. September, that's what I shared with you 3 months ago. October, November, so I took another analysis at the beginning of November, about 5 weeks later, and then December, approximately 7 weeks later. So here's a little bit of good news. We're starting to see that a Fort Myers area, again, this chart shows three-bedroom homes. If how many three-bedroom homes are basically available to rent in Fort Myers, we see about 500. If you had $2,000 or less to spend, there's about 75 right now, and 1,700 or less, 26. So the inventory is not going up in Fort Myers. You are still seeing some sliding of the rents. Okay, Cape Coral, a little bit interesting. You're starting to see the numbers go down a little bit here too. Three bedrooms, the number of three bedrooms that are 2,000 or less going down a little bit, and also $1,700 or less. So that's a little bit of good news for the Cape Coral. I mean, again, still we have a large number here, but at least some of the numbers are trending downward. That's great. Lehigh, a little bit different situation. You can see the number of properties, three bedrooms for rent, up. The number of $2,000 or a month three-bedroom homes are up. And luckily, there's been a little bit of a plateauing here or stabilization with $1,700 or a month or less for three bedrooms. Now, good news, Port Charlotte, yay. They've gone down from November, so that's great news. Number of three bedrooms are down. The number of $2,000 or less three bedrooms on the market are down. The number of 1,700 or less properties are also down. That's excellent news for Port Charlotte. So hopefully that trend will continue into January. And Naples, this was erratic. The number went off the charts. I can only attribute that somehow to some type of short-term furnished rentals getting into this. It makes no sense. Still, Naples tends to be a very high-end market. So for 2,000 less, you can see almost nothing is available. And again, these properties are for single-family homes or townhomes. I didn't want to break them into apartments or condos because that would get a little bit confusing. So having said that, the predictions in writing, and you can quote me on this. I put these predictions in writing. So a little while from now, a year from now, you can say, Michael, you were right or you were wrong. And you can obviously reach out to me and tell me if I was right or wrong. So what are we looking at here? So predictions. So I believe that for 2025, the rents will remain flat at the lower levels, okay, because people at the lower levels have very little discretionary income. Gas and food are still high, so they will not have more money in our area to have rental increases. And I also believe that the high-end rentals, I should say, will drop further because of a lot of inventory in our multifamily that's existing. The number of units that are being brought online in our area is going to be substantial. And we also have a lot of lack of sales going on. So people are lowering the sales price of their properties. And eventually what's going to happen is they're either going to just get rid of it at a low price. They're going to just hold the price there and let it sit month after month after month, which maybe they can do and afford, or they're going to finally say, you know what, let's rent this out until the rental market like comes back in the next couple of years, 2 or 3 years later. Okay, so that's what's happening with rents. Insurance costs. So I believe that insurance costs will continue to rise slightly just because of inflationary issues and also because we had those hurricanes that hit Florida because insurance is basically affecting, at the state level. But I think that we're going to get some relief in 2 years if we don't have a hurricane. If we have another hurricane or so, then obviously that's I'm going to throw this prediction out the window. Here's what happens after a couple of years of no hurricanes. Other insurance companies will look at things and say, you know what, these insurance companies that have been in Florida for a while, they're starting to make a lot of money. So we're going to come in to the state and there's going to be a lot more competition that way. And that's why it's going to lower our insurance costs. Now, flood insurance, I don't see that going down because of the amount of losses that insurance companies had recently. So that's still going to stay high, which, by the way, is affecting rental properties, also sales. So it's hurting sales when somebody all of a sudden has to pay $6,000 a year for flood insurance. And obviously, some of our clients also have rental properties in a flood zone. And all of a sudden, when they change the flood zone, like they have where you've had Hurricane Ian come by, or Helene or Milton, and scare people or flood some more of our areas, then that's what's going to affect also the rental insurance for these properties as well. Property taxes, however, should stay the same upcoming this year and maybe even slightly go down. So what I mean by that is some of you are in the process of paying your property taxes right now, and the next time that you're going to see your property taxes is in November of 2025. So that's in 10 months from now for the 2026 year. So what I think you're going to see is the rates kind of stabilize, maybe go down a little bit, and then in 2026, like November 2026, beginning of 2027, you're going to start seeing your actual property taxes go down. That's because we're starting to dip now. The way that they work on property taxes is January through December. So when you start to get a slight decrease in the middle of the year, you're really not going to feel it for another year. Okay, so look for that to happen. And finally, final prediction, 2025 and 2026 will be a good time to buy investment properties in a cheap way. So the cost of properties are going down right now. The market is adjusting. Everybody's aware of it. But also keep in mind that the rental rates are lower too. So just remember that the rental rates should be climbing in about 2 or 3 years. Those are my predictions right now. If you think that I'm crazy or you think I'm right, feel free to call me or write to me. I'm Michael McVitie, president of Red Fortress Property Management. You can reach me at the number here, the local number here. That's my extension. You can also reach out to me at my email, mike@redfortresspm.com. I hope this has been informative. I really hope that this helps give you a good perspective of what's probably going to happen in 2025 and what's happening currently. I'll have more updates in a couple of months. But again, I really hope you take this knowledge to heart and do whatever you'd like to do in terms of investing. Again, feel free to reach out to us. Have a great 2025. Thank you for your time.